Let's begin. Okay. Thanks very much for joining us here. I'm Jason Sharp of CapX Ventures. I'm kind of going to act a little bit like an MC. This is our own minor, panel conversation on the topics of Bitcoin mining. So I'm going to start out by kind of describing to you what this is and what this isn't about in this presentation, because we want to actually have it be pertinent to everybody's expectations. So this is not about understanding Bitcoin and the blockchain and stuff. That's a rabbit hole that you can go down. And I know there's a few people in the room that are very familiar with that. And then others who are going, I have no idea what this is. What we're actually about is really the mining aspect. So again, what we're covering here is not Bitcoin itself. It's the mining aspect with natural gas. And you're going to get to understand why this is an interesting play that borders on insanely obvious of a play. And that's not to convince you to invest with us, but to really educate you on what some of the power dynamics are in play to make this work. So this conversation is going to be amongst these two very knowledgeable colleagues. We've got Kristine Cranley and Will Crozier, and for your benefit, I'm going to go ahead and give them an opportunity to introduce themselves. So Kristine, tell us how you got involved with Bitcoin, why you're sitting here, not just because it makes me very happy to have you join, but, how are you even related to this Bitcoin mining and maybe even an aha moment to get you here?
Yeah, so I went down the Bitcoin rabbit hole, as we say, in 2021, locked up for COVID. The commercial building that I helped manage went into foreclosure during that time because we were in downtown DC. So moved back to Texas, had a chance to remake myself, and I just started looking into what is our monetary system, and it's based on debt. So the more debt that we have, the more the money supply grows. So all this stuff that's being shipped all over the world, all the money bailouts, it's not coming from our taxes, it's growing the supply. And I had a history of helping, when I graduated from college, I did work with pregnant women who were looking for ways to be able to provide so that they could give life for their child. And always it was the financial that they ran up against. And I had just seen in my life, the poor are the ones that are hurt the most by inflation, because it's assets that go up, right, when there's more money injected into the system. So the more I learned about Bitcoin and its cap supply, the more I just fell in love with it. So I started talking about it to who'd ever listen. I started an LLC to educate on it, and I got picked up along the way by a registered investment advisor firm, which was one of only 5 in Texas that were offering Bitcoin exposure to their clients. And we invested very heavily in stranded gas Bitcoin mining. And so that's how I got introduced to the whole world. I'm like, what in the world is stranded gas? And so I've been doing that now for a number of years, and I love it.
Wonderful. Thanks, Kristine. Will, this is my partner, Will, from CapX Ventures, and I've known him going back since 2013, so over 10 years. And I'll just mention this aspect of it is he's always kind of fidgeting around in different technology in different mechanical things. He's always loved fast cars and powerful technologies. Big fan of what speaking for you obviously of Musk with his rockets and with his Teslas pushing the technology envelope. But he started talking to me about Bitcoin several years ago and really was like, we'll keep running. This sounds really, really good, but I'm going to save my legs for the implementation of our investments in there, but you keep expanding. So why don't you give a quick summary, similar to Kristine, of what turned you on to it, the aha moment, and please proceed.
Sure. My name is Will Crozier. I come from multifamily real estate, jumped in about 2009 in multifamily real estate and ran through it to 2019. So I was in 10 years in multifamily real estate. And what a 10 years that was. What a different place we are now. In 2019, I sold almost all my holdings, everything I had. I sold an import company where I was importing materials from China. I retired. I retired in 2019. I sold my house in the Roanoke Westlake area. I packed up a 40-foot container and I moved to the Philippines. So for the past 5 years, I've been in the Philippines, and I've been building orphanages. I've been doing humanitarian medical work with the orphans over there and just the population in general. There was a lot of need. I fell in love with doing that, and I really enjoyed it. Uh, Things were going great. I was investing over there in the Philippines and in Southeast Asia in general. And then something happened in February of 2020 that changed my life forever. And it happened that early because we were over in the Asia area. And so we're already feeling impact from China earlier than most parts of the world. The Philippines entered into a 2-year lockdown. And that meant when you're going to the market to buy food, you had a mask on, you had a shield over that, you had to wear a tag like what you all are wearing with a QR code identifying who we are, where we're coming from. Are we the head of household that deserves to be allowed to go out, to go shopping? No one else was. And I always had about 20 to 40 bucks tucked inside there in case I needed to bribe anybody, because without fail, there was always some kind of an issue. We're trying to, milk a little bit here or there. That left a long-term impression in my head. That was difficult. Lost several businesses over there that we were investing in, small businesses where people were investing their life savings, and I was trying to help them. Mom and pop shops, hotel vendors, so across the board. Some businesses lost, and it hurt. It hurt me psychologically. It hurt me in my heart. Not that only I was losing money, but I was watching the world lose freedom. I was watching these families who invested everything in these businesses get shut down for 2 years. A lot of companies couldn't even run at all for 18 months, just full lockdown. And that hurt. And the whole time I'm in lockdown, I was researching. I went into the rabbit hole, and I couldn't leave. I couldn't go anywhere. So, get the beard growing out and just look a little bit lunatic mode. But what an educational curve that was for me. Not only did I get down the Bitcoin rabbit hole, but I also started understanding international investment more. I started applying for passports. I'm a triple citizen right now. I'm working on my 4th citizenship now. Just keep stacking them up. It feels a little bit like you're a spy when you're going to the airport and you're, the wrong passport and all that. But I became much more interested. Yeah. I became much more interested in freedom, in personal freedom, in self-sovereignty. I became very interested in not allowing myself or my family to get sucked into government control. During the same time, you probably remember the truckers' protests up in Canada. The truckers and the farmers went to the Capitol, slammed it with congestion on the streets with their trucks and their tractors. The government of Canada did not like this whatsoever, and they froze their bank accounts. They froze all of their bank accounts and said, we're going to beat you this way. You can't buy diesel fuel anymore. You can't buy food anymore. The one thing that really clicked in my mind at that moment was when Bitcoin took over and they were able to transmit to the protesters cryptocurrency, Bitcoin, to allow them to continue to fund their protest, to apply pressure to the government. And that was impressive. It didn't go through the traditional banking system. It didn't go through traditional communication channels. It let the protest continue. So I'm going on a little bit there, but it was a really big aha moment for me when I saw the government of the world closing in, stealing our freedom, and basically abusing us with monetary policy, printing trillions and trillions of dollars. And we've all watched our dollar just devalue and devalue and devalue. And the whole time that's happening, Bitcoin is going up and up and up. So a big aha moment for me was you have got 21 million capped Bitcoin. There's never going to be any more than 21 million. Already 95% of that supply is in circulation. So there's only 5% more Bitcoin that can ever be mined and enter into circulation. So that fixed supply, that fixed cap was huge to me, as I heard you say it also, Kristine.
Yep. With that, it turned out to be just a phenomenal, almost serendipitous coincidence with the pivot that I had done on behalf of CapX Ventures into the oil and gas world, because there's quite an interesting marriage there, and that's really the heart of what we're presenting today, and what brings all 3 of us together. So it was terrific that while Will was exploring in that area and I was exploring into the energy sector, that we found this cross section. So what I'd like to do is pause for just one moment and say, silence your phones. Okay, thanks, Chris. And, and I'm going to go ahead and show a brief video that explains to you what the Bitcoin mining is. Then we're going to get ourselves into real discussion about it. If I may ask our panelist here to step over to the side, and I'll get this plugged in. It'll just take about 3 minutes.
This is Kristine's video, by the way.
Yeah, it happens to be Kristine's video. There we are. Which
Did you know that Bitcoin mining is helping to clean up the environment through its use of stranded natural gas to power the network? When drilling for oil, natural gas is released as a byproduct of the drilling. Natural gas pipelines are built out to the oil fields to provide a way to sell that gas to the energy market. However, when natural gas is stranded, that is, located far from any pipeline infrastructure, oil fields are forced to burn this excess gas in a process known as flaring in order to prevent it from escaping into the atmosphere as methane emissions. For, according to the EPA, methane is more than 25 times as potent as carbon dioxide at trapping heat. And the latest statistics show that flaring is only 91% effective in reducing these methane emissions. Enter stranded gas Bitcoin mining. By bringing a generator and a simple data box of computers out to the wellhead, miners transform what was formerly a waste product into power for securing the network and releasing new coins. In fact, there is currently enough stranded gas around the world to power the Bitcoin network 7 times over. By utilizing this resource at its source, gas that is currently being leaked into the atmosphere can be captured and put at the service of securing a decentralized global monetary network, providing property rights to billions of unbanked persons around the globe. Through its location-agnostic ability to seek out and soak up stranded energy resources, Bitcoin mining brings industry to isolated regions, removes the need for costly and less effective mitigation measures like flaring, and transforms a waste product into digital monetary energy, all while cleaning up the environment in the process.
all right. That's actually worth a little bit of a clap, simply because that is that is not only Kristine's product, as in she produced this, but it has bounced around through X and the big Bitcoin and crypto players who went along with several others of her videos, but she happens to be right here. That was her voice, not some wonderful AI. So the thing is, we're here to talk about how to capitalize on that. And I'm going to just mention a couple things before I swing it back to the more valuable speakers of this presentation. But again, thanks to Will and opening my eyes to a bit of this and learning more how to take advantage of this cross section, is that I joined him in Nashville earlier this year at the Bitcoin conference. And one of the more interesting things while I was there had nothing to do with Bitcoin. It had to do with energy production. It had to do with the need for energy production. And if you consider what happens in the highways that are out there when you've got all this construction going on, I don't even mean to be coy about it. I actually think it's about like this. You spend about a year with all of this crazy construction work for about 9 extra months of capacity. Because after that, it's already just absorbed, at least in the DFW Metroplex, with just way too much traffic. And in the back of my mind, I've always kind of gone, hey, what happened in the 50s, 60s, 70s, where we used to build things with overcapacity that we've been able to ride along for such a period, to where now whatever we build is more like a just-in-time solution that only gets us so far. Municipalities, counties, states, parishes, what have you, they're all panicking on the need for more energy, like factors more energy in the next 10 years or so. We use it all over the place for a variety of needs. The fact that we're talking about some crypto Bitcoin mining is, to me, tangential from the need for the extra energy. And the energy arrives in a variety of places, including the stranded gas, flared gas, or just regular production out of wells. So in my mind, it's very much how does one gain an edge in pulling all of this together and riding that increase of production needs for energy and energy output, whether it's coming out of generators that are on site, call it micro generators, or whether it's the massive production power plants that are happening, in um, big population centers, that type of thing. So with that said, how about I hand it off to Will? First question here is, how does one gain an edge, and what is looming that allows us to find that path into something that gives us a much stronger advantage if everything is going to be rising with the needs of energy, how does one capitalize on that in the best way?
Sure. Um, One thing that maybe you're not aware of that I find is really interesting is for a miner to create one Bitcoin, on average, it costs $70,000 to mine one Bitcoin. That's approximately the price of a Bitcoin. So if you're going to go to war and try to mine Bitcoin, and it's going to cost you $70,000 to make $70,000, it just doesn't pencil out. You have to find an edge. And the edge comes from cheap electricity. You have to find a source of cheap, continuous, constant flowing energy. That's why the oil and gas industry with the natural gas has become really a hotspot for Bitcoin miners. It's the ability to not mine on the grid, on the electrical grid, competing with air conditioning, competing with electric cars charging. We're able to drill into the ground, to pull natural gas out of the ground, connect it to a generator like you saw in her great video, and to create electricity to mine Bitcoin. It's really that simple. The problem is people want to buy natural gas to heat their house. They want to use natural gas to create electricity at a centralized generator station. Where we've identified an opportunity and that we're monopolizing is this flared gas. It's a stranded asset. We're literally lighting it on fire and blowing methane into the atmosphere. I'm not really an environmentalist per se, but even I have, an issue with trashing our planet. It doesn't seem like a good idea. I'd like to do something a little bit better. So connecting these generators, these gen sets, enables us to get really extremely discounted energy to go and compete on the national level with our electricity price being so much lower than everyone else. That's the edge we've defined. To just go one step further, we had a big, I'd say, monumental contract signing just a few days ago that really changes everything for us. We are dealing with the largest private oil company in the United States, massive entity. And right now, the government has put them into a lot of trouble. Not just them, but the entire energy sector. During this COVID time, there was this thing called the Inflation Reduction Act. Some of you have heard of it. It's a wild title to put on that Inflation Reduction Act because one of its primary measures is to start taxing energy companies for any emissions that come out. If they're venting gas into the atmosphere, they're going to have to pay enormous fees and taxes on that. So this company has come to us, to CapX Ventures, and basically said, can you help us solve this problem? What can you do to help us so that in next year, a 30% tax on their emissions goes into effect, and the following year, a 40% tax on their emissions goes into effect, 50% the following year. They're going to keep cranking it up until it's 100%. SpaceX and Google just launched a satellite a few months ago that's called Methane Satellite. They put that into orbit, and its whole job is just to scan the entire globe looking for where people are venting gas, where they're leaking gas, where they're emitting methane, and then immediately contact the EPA and the IRS and do their magic and just inflict as much pain possible on these emissions. So they're desperate. Next March is the first time they have to write a check for these penalties. Next March is the first time they write a 30% check to the government on the fines that they're getting for flaring the gas. So we've got a contract that essentially gives us unlimited free energy to mine Bitcoin with. Those building blocks right there to me is just dynamite. Like it's everything we need to have an edge to compete. It's unlimited supply. It's a bit of an exaggeration, but basically all the natural gas we could dream of is at our disposal. And we signed that contract. Our first mine with them goes live in about 2 weeks from now, and they're begging us to please bring more infrastructure online so we can continue to fund Bitcoin mining on their flare gas, particular one down near Galveston.
Yeah. What I think is interesting that you're describing here is that I know that when we have our own wells, and one key point of that video is that where there's oil, there's also a gas component. It's not just pure liquid that comes out. And then incidentally, even when it's a pure gas well, there's some non gas liquids, NGLs as they're called, that's part of it. So the point is that there's a mixture in there and stuff. So it's going to happen anyway. Any drilling and stuff is going to have some of that methane component or some of that natural gas component. But we're not even talking about necessarily tapping our own wells. If we're producing enough, and same with anybody else who's producing enough gas out of their wells or their field, is that it's worth connecting pipelines to the marketplace and then outright selling it. But what happens here is there's value for us to actually go play, as I think you've eloquently pointed it out, is that there's value to go play even when it's fields you don't own, because it's a liability that you're solving on these other players. So, Kristine, you've been in the same boat here with deploying mines and to this aspect. What other kind of beneficial edges have you kind of seen? Is there anything that you'd care to add on here, especially outside of big government?
Yeah, so the timing is everything. So with this market, the Bitcoin market, the reason it's a cap supply is because every 4 years, the supply issuance is cut in half. It's called the halving. And what it's always done in the past, disclaimer, past performance is not a guarantee of future results. But in the past, after the mining supply is cut in half, the miners are hurting because they're making half as much. The price of Bitcoin has chopped sideways for 6 months, and then it starts going up, way up, like past the all-time high, and then it doesn't usually come back down. So it reaches the next level. And so, but what happens is when Bitcoin goes up in an exponential way like that, the price of the mining computers go up 10 times that. So what might be $1,000 for a computer now, at the peak of the bull market, it's going to be $10,000 a computer. So when you're judging a mining project, there's 3 things to keep in mind. One is the price of energy. The other is how much do you have to put in to buy those computers? And then, of course, the price of Bitcoin. So where we're at right now in the cycle, one other thing to know about the Bitcoin mining cycle, when there's more computers that come online, the system adjusts the difficulty to make it harder to mine Bitcoin so that there's only one new block added to the blockchain every 10 minutes. And so when you're at a time like we are now, a lot of miners are not profitable anymore. They put too much money in for their computers. They have a too high price of power. They go offline, they sell their computers, they wash the market. So right now, the miners are bleeding because Bitcoin hasn't started going up like it did in the past. And so the computers are as cheap as they're going to get right now. But the expectation is in the next several months, if it's done anything like before, it should start going up. And then you're going to have everybody rushing into the space. So I'm also doing a project different than theirs. Mine's gives back Bitcoin, but I will not have a project next year. I probably will not do another project for another 3 years, because with the mining cycle, now is the best time to invest, in my opinion.
Thanks, Kristine. So, Will, you've gotten to see already this at work. So I'd like to talk about some past performance that both of you guys have gotten to do, because it's one thing to talk about this and talk in macro of what Bitcoin has done in the past, or what the miner prices have done, even energy, where sometimes people are able to do their plays at the right time by ignoring an energy price and doing it right off the grid, right inside a city data center. for a certain period of time until they're priced out, that kind of thing. But yeah, bouncing back to Will, you want to talk to them a bit about our past performance with this?
Sure, we built a proof of concept mine out in Amarillo, 3 hours outside of Amarillo, something like that. It was on a stranded gas asset. We worked hard on that. We put it together, and in general, when we're forecasting what we're going to do with Bitcoin mining, what are the returns, right? What's the money all about? Generally, when I'm forecasting it, to me, it looks like if you do poorly, it's about a 0% return. Not very exciting. If things go moderately well, we typically look for about a 50% return per year. If you're hitting at the right time, you buy your equipment at the right time, you have some advantages like getting the flare gas, getting free energy, 100% returns per year is really the norm of how we're anticipating these projects to go. Our project there in Amarillo, our first one, we had some hiccups, but we still were able to clock 42, 45%, somewhere in that per year. So we were pretty proud of that on our first attempt. Figured out a lot of stuff that we did wrong. And then, yes, sorry. Figured out what we did wrong, made some new alliances, and yes, have this new energy component that we're super excited about. So I'm hoping that we'll be able to maintain healthy returns like what we did there, and perhaps and hopefully improve upon that.
Thank you, Will. How about you, Kristine? Any past performance to lessons learned,
Yes.
returns, anything to describe here?
So we've, the RIA company, we actually let go of our financial license because all we want to do is Bitcoin mining. So we've done pre-seed round and seed round in one of the major gas mining companies that makes the picks and shovels, so to speak, Giga. And then we've done several different projects. We've done a pure mining. We've done 3 hosting, where we build out the energy infrastructure and then we basically rent it out to other miners. That's much more steady income, but it doesn't have the same upside as if you're just getting the pure Bitcoin mining. Currently, we've had an offer on all our projects because right now people expect Bitcoin mining to start going up exponentially. And so we got an offer the other day on one of our on-grid sites. We turned it down because we think we could probably get a 1.9 multiple, and that would be a year into the project. So we've learned a lot, though. Generators can be difficult. We've had problems because for our projects, we buy used generators. I don't know what your policy is, because you can buy a new generator and you're going to spend a lot of money on it. You can buy a used generator. In either case, there is usually a lead time. It could be from 6 months to 18 months to get that. But with the used, you got to make sure that it's working. And so we've run into issues with that sometimes, with having it go down. And but overall, it's an exciting time, especially since I actually got asked if I would sell the project I'm currently putting together, and I said no. But we're probably going to sell all the other ones just to kind of flip it, because when people want to get in this space, when Bitcoin starts going up, they want in now, and they can't wait for a year lead time. So these assets that they're going to have, even if they wanted to flip it, just having an energy asset alone is a valuable commodity.
Yeah. I'll add something with, the beauty of having it on grid, which was the phrase used, meaning in an actual city data center or off of city energy, is that you've got big boy, generators, power production, et cetera, and it's steady electricity coming in. You don't need a generator. But when we're out in this flared stuff, in this vented stuff, these are very unimproved locations. And the beauty is that what it takes to keep those generators running is exactly the type of skill set that you have for field operations anyway. Pipes, gases, fuel, electricity, all types of bits, or electrical, I should say, rather than electricity. Electricity, you might be generating it yourself out there, even to drive lifting equipment for your wells. But it will, if any of you guys trying to see, I don't think anybody in the room has come out in the field with us yet. but we'll fly out there because there's always small municipal airports nearby, and so we'll do site visits. And it's remarkable how unimproved it is. So even our wells, if they're tied to the electrical grid out there, it's very, very shaky. And so having those generators that Kristine was mentioning is key. And we had some learning lessons of going through some lesser manufacturer types versus better ones. So all of that is great.
Can I add one thing right there?
Go right ahead.
Thank you, Jason. What I love about Bitcoin mining is you get out in the field, you've got fire shooting out of the ground, you've got mud, you've got dirty oil, you've got guys out in hard hats and work boots. It's literally what ties this virtual currency, this magical internet fairy dust money, it's what ties it to reality, right? It's the very thing. It's a proof of work. You have to work. You have to expend $70,000 in energy and men with wrenches and fumes and smoke. I love that concept about Bitcoin. Exactly right. Like instead of the Fed, as they say, burr, we have to do something, expend tremendous amount of energy in the field working to produce these coins. And that's what ties virtual crypto internet money to reality. And I'll add one more thing on that thought, and that's Bitcoin mining. Maybe you think Bitcoin is ridiculous, and that's fine. The cool thing about Bitcoin, you don't have Bitcoin mining is you don't have to have any intentions to love Bitcoin, to think it's gonna go to the moon, change the world, or whatever your view is. Because generally speaking, at least on this project that we're working on right now, we mine the Bitcoin, we sell the Bitcoin for dollars, and we push it out to our investors. So essentially, it's a widget. We're making Bitcoin widgets and selling them.
Yeah, so Will, you actually touched on that. The final question I was going to ask is who needs to really understand Bitcoin, buy into Bitcoin, get a crypto wallet, get everything set up in order to participate in these types of deals? And the answer is no one.
Nobody.
Well, depends on the deal.
Depends on the deal. What we do at CapX Ventures is that we're ultimately trying to get money into your hands. And if you love Bitcoin, and I know some of you in the audience are big, then you can take that money and buy the coins. But we're not going to hold the whole group at that same standard. Kristine, on the other hand, has a slightly different approach.
Yes, so that's why we work well together, because it's different projects. So I just have it's a small project that I'm working on because I was asked by people in this community to put one together. And so I'm currently got a megawatt that we're building out. We have 20% online. Kevin, mechanical engineer, went and visited 2 days ago, so it's really there. He could tell you about it. But we're going to pass back the Bitcoin directly to our investors. So I'll hold it on the balance sheet for 3 months because we'll pay the gas bills out of it. We pay $1 an MCF, and then pass it back monthly. Yeah, but we got pretty good cheap generators. So yeah, depending on what you like. That's the beautiful thing about this. You've got an energy asset, and the interesting thing right now, AI is soaking up every ounce of available on-grid power because they can't go down. Like they can't just use cell access like Bitcoin mining does. They need fiber run out that way, and they need duplicate power, and they are not shutting down during an emergency. We've done on-grid projects. We had 4-cent power, but I think those days are going away. So a lot of the miners are probably going to be selling their energy infrastructures to AI, which is going to push Bitcoin mining off-grid more and more. And it's not easy to find operators that can run those generators. It's not exactly plug and play. So it's an interesting moving forward, because if more Bitcoin miners come offline, it just makes it more profitable. So whether you're doing what they're doing, where they're going to sell the Bitcoin and pass those dollars back to you, or you want to mine Bitcoin indefinitely, because we can always sell Bitcoin later and buy new computers and then get hopefully below spot Bitcoin moving forward, there's that option. Or maybe you'll decide one day you're going to host other Bitcoin miners and charge them that way. There's so many ways to monetize these assets.
How about, in the interest of time, we ask if there's any questions, any at all? Go ahead. Good.
So a couple of questions. So Will, you mentioned it costs 70,000 to make 70,000. With your one thing you put up in Amarillo or close to, what was your payoff to generate one? How much did it cost?
Let me say, please repeat the question in case I don't know on the recording if it'll be heard or elsewhere. So,
So the question was, if it costs 70,000 to make a Bitcoin and it's worth 70,000 previously, what was our advantage? How much were we producing a Bitcoin for? We were usually at about 20 or 25% discount to produce a Bitcoin based on what the spot price was at the time.
You still couldn't compete with free energy like from Russia or China, where they're just setting up these things and the country subsidizing, right?
Sure. Well, that was happening in China, and they banned it. Russia just banned it as well. Like, so they're running illegal operations that are shaky at best.
Chihiro.
These wells, as I understand them, there's a steep production drop-off, right, of the petroleum products. So how portable are your rigs?
Very portable. Or I don't know about yours, but that is one thing. There's, in Texas at least, there is so much gas. And so we've got plenty of opportunities to move them, and you can do it in a day. It's just a generator and it's basically a shipping container of computers.
Let me also mention this. You are not going to size your generator and your data center of all the miners for what that initial peak amount of gas that's generating is, right? So it's not there, and then we've got declining stuff. You're going to size it down below because there's no way to avoid that depletion curve that comes into play. So you size it right for something that's closer to the ongoing for the period.
Bitcoin mining naturally runs on like a 4-year cycle. That's very typical because that's the halving cycle she was explaining. So we pencil in about 4 years and just be flexible as needed from there.
Question, Chris.
As we go next year, we have an expected bull run kicking off. So how much do you expect the hash rate to increase relative to the price of Bitcoin?
A lot. Which the question is, how much is hash rate going to increase? And that hash rate just means how much power is online mining this stuff. And so the system is so beautiful because more and more will come online. It may be that Russia and China are actually mining as nation states, and they just kicked out all the private miners.
All their competitors.
But as more and more comes online, the ones with the more and more expensive costs of power go offline. So 7 cents, now you're not profitable. 6 cents, now you're not profitable. 5 cents. My project, you can tell me what yours is, probably the same or even better, but our project is mining at about 2.5 cents a kilowatt hour.
What would be your break even right now?
Break even price for Bitcoin or hash rates?
Break even, cost of electricity.
Yes, price per Bitcoin.
7 cents a kilowatt hour. Most miners wouldn't be mining more than 5 cents a kilowatt hour.
Yeah, it's strange if we're on stranded assets and our energy is this low. We almost enjoy that pain getting inflicted on our competitors.
Because they all go out of business.
They're all gone, and so then the hash rate drops and our profits increase. So
and then the
pain
system
is good
gets easier so that it gets more profitable as the rest come offline.
Yeah.
Did you have a question?
Looking into CapEx, the current fund, what I saw was that none of the Bitcoin is part of the projection. None of the Bitcoin mining revenues are part of the projections. Is that because there's a chance that, like you said, it'll just be 0%? Or is the expectation, because you're getting free energy, that you'll still have a huge discount?
I can handle that one. Yeah, the answer is actually because we wanted to focus first and foremost as the drilling of the oil and the basically oil wells that will have a gas component, but the Bitcoin portion is a small add-on that goes in, and we didn't want to get things too kind of confused with that. But when we were lining up this contract with this the largest private producer, we're dealing with a tenth of the price of natural gas for us to produce on this stuff. So we know this is going to be highly profitable, and it's literally that the deal is already showing such strong returns, we didn't want it to appear absurd. And worst case scenario, a little bit to what Chihiro had asked of, how do things adjust over time, is that it's a hedging component where we can take very, very cheap, if not free energy, natural gas, and turn it into something that is going to be quite the multiplier or value add of what that returns. So to us, it's what it's going to do is it's going to drive up the returns, but it's going to be more flat versus how the oil and gas product starts out with a very, very rapid return driving up the IRR, but it bleeds out over time, whereas the Bitcoin is going to continue. It'll have fluctuations per everything that was described here, but nowhere near that that typical production curve. I hope that helps a little bit.
So it sounds like the ability to get extremely cheap gas is kind of where the starting point is for this, but I have to assume, I mean, they're going to show some brilliance or some ignorance here, I'm not sure which one. The underlying compute power that you guys are using, presumably, can you talk about that? Because that's what's doing the work. So presumably there's some efficiencies, like if you're running the 286 computers from 1990
Yes.
compared to what you're doing now. So can you, because that's what's actually doing the work.
Yeah, that's actually some. So the question is, what kind of computers are you using, and how does that factor into your returns? And that was, so the size of the nanometer chips has made a real difference. So in the last several years, I had a project a couple years ago that has not done the kinds of returns that we've wanted, because those we already bought one generation older, and so they were 7 nanometer chips, and now we're at 3. And so like my current project, we're buying 3 nanometer chips. What they say in the industry is you can't get much smaller than 3, so they don't expect that decline curve, so to speak, with the ASICs to be as much of a problem moving forward. But it is something where there's definitely value in buying the newest. It doesn't have to be the newest of the new, but the smallest of the chips in order to keep pace.
So you keep that rig for the full 4 years? Or
They usually 3 to 5 years is their lifespan. It's a good question.
When we bought ours, it gets equated to, we're buying a 2022 Ford F-150 brand new off the dealer lot that's been sitting out there for a while. It's not the latest and greatest, and you can get a nice discount on it, but it's a solid workhorse that, it's got 4 years in it.
Told you he likes cars. Okay. Well, how about the last one? Because I know Ron's gonna be back on. Go ahead.
How do you monetize the Bitcoin you produce? What are you doing with it? You keeping it on balance sheet? You liquidate?
Sure. The automatic response is we just sell it and give you dollars. We've built into our PPM, to our offering documents, the ability for some discretion on the manager's part of how to handle that. Bitcoin again and again and again displays a very repeatable curve on how it's doing. It's got its ups and downs, and it's a 4-year cycle, and it just keeps repeating and repeating. So where it makes sense to hold for 2 of those 4 years, because it's just naturally floating up, and we hold it for a while, I'll sell into the down markets. I'm not trading it, I'm not doing anything fancy, but right now I wouldn't be selling Bitcoin. I'd hold it for the next 12 months and then do a lot of selling. Some discretion.
I think we'll thank you guys for the questions. We'll end it now. You can obviously find us and ask further questions out in the hallways, but I'm terrified of getting interrupted. Plus, it's time to eat. So thank you very much. Thank our guests, and appreciate your time.
Give me 30 seconds, please. I want to say one thing. Felipe, can you stand up, please? This is a big moment for me. This is amazing. Felipe worked at our property 10 years ago as lead maintenance, right? Yeah. Lead maintenance on a 500-unit apartment complex in Arlington. We look out and we see this guy. He's here. Think of who's around us. We doctors, investors, big wallets. He's been building houses for the past several years. How many have you built? 5. He comes up to me yesterday. I'm shocked to see him, and he's acting nervous to me and saying, I want to do more projects. I'm not exactly sure how to do that. my own community doesn't really have investable capital. He looked nervous and concerned about it. And I said, Felipe, you went from there to here. You're trying to make something for you and your family. You're doing amazing things. You're building houses. You're making profit on it. Shake this guy's hand, exchange information. Maybe we can figure out a way to fund some more houses. I'm telling him to build 4-plexes and then go to an 8-plex and then a 16 and a 32. I would love to see him succeed. Amazing to see my lead maintenance at one of my properties here at this event.